Okay, hello everyone. Good afternoon. I hope you can hear me. Video, audio, all good? Okay, that's great. So welcome everyone to this webinar regarding how to be successful. And this is the first foundation in the new trading journey. So welcome everyone. And before we start, let me introduce myself for you. My name is Ahmed Yusri. This is my profile. I'm working in a Pure Prime as a global macro strategist and a trainer. I've been in the industry since 2022. I've been trading and I took it professionally after that. Before that, I used to work in the banking industry. So I know how the bank works and the brokers also work. So I hope this webinar will be beneficial for every one of you. And today we are going to cover how to set up your success in the trading journey. So what we are going to cover today is how to choose your broker. This is number one. Number two, which platform that you should use, or what are the advantages of the different platforms in trading. Number three, how you can open a demo account and what are the advantages that you will get if you opened or you practice on a demo account, as well as the disadvantages for that. And the most important section, which is the basics of risk management. And we will spend a little bit more time in this part because it's very important and crucial thing to get into the right way in the trading. And last thing, I will keep like around 10 minutes or more maybe for your question and answer and to clarify all of your doubts. So are you ready for the webinar? Shall we start? Okay. Okay, so before I start the webinar, so I would like to ask you a question before jumping to the CFDs and how you choose a broker. Now, for sure, you have joined this webinar for a purpose. And before that, I want you to answer this poll that I'm going to launch right now, because it's really important and matters to me that I understand what is your level of experience. Okay, so beginners, intermediate, professional. Okay, I guess every intermediate, we have two. Great. So I think we are done or not yet. Okay, let's wait. Beginner, beginner. Okay, okay, okay. Okay, so I'll say like we have 80% are beginners and intermediate of 20%, roughly speaking. Okay, and why I'm asking this question, because it's very important to, I want to add value to everyone, whether beginner, whether intermediate, and whether even professional. I would like to add value for everyone to get the best benefit of this short webinar. So let's start by how to choose a reliable CFDs broker. So before we jump to the broker of the CFDs, we need to understand a very important thing. What is the CFD itself? So we need to understand what do we mean by CFD in order to be able to choose what is the broker. Okay, now CFD refers to something called contract for differences. Now, the CFDs, it's under a name of a financial product in the financial market. We call it a derivative. Okay, so we have a financial product. It's similar to stocks, similar to bonds, similar to any financial assets. We have an asset called derivative. Now, derivative means that there is something that is derived from other thing, right? So what is the thing that we have derived? So if, for example, if we have a gold, Now, the gold as a physical gold, now I think it has reached 4,378, something around this at the moment. Now, I don't want to buy the physical gold. I don't want to buy the physical gold. Instead, I will extract a contract, just a piece of paper, and this piece of paper represents the price of the gold only. So this piece of paper, this is the derivative. This is the contract. Okay, now this is the first part. So we got the first part, which is the contract. Now we need to understand what is the word for differences. What does it mean? So once you get this contract, it means that you are speculating or you are expecting the price of what? The price of the gold, the price of the physical assets. So if you are expecting that the price of the physical asset, which is the gold, to go up, then you would buy this contract. And once you buy it, you will wait the market to, if it goes up to 4,379, so there is an increase of $1. Okay, so this is your profit. Now, what's the profit? The profit is the difference between the 4,379 and the 4,378. This is simply speaking, what do we mean by the contracts for differences? So as brokers, for example, PU Prime, we do give you the access to the contract for differences for different assets, for stocks, for forex, for gold, for silver, for everything. Okay, so we just giving you the contract. Okay, and you choose whether you think that the price is going up, then you have to buy. If you're expecting the price to go down, then you have to sell. If the price is going to, you're expecting 4,376, then, and if you pressed, I would like to sell this contract, so you are speculating that the price is dropping, then you have a profit of $2. So it is just an agreement between the trader, which is yourself, and Pure Prime, the broker, and you are just speculating on what? Speculating on the price of the physical assets. Is that all good? Thumbs up? Okay, cool. Now, how to trade the CFDs. Since I have just explained what are the CFDs, okay, how it works, what is the concept behind it, now we need to know how to trade it. I think from the example that I've just explained to you, it seems like it's pretty simple. Like the price is going up, buy, the price is going down, just sell. Yes, it's simple, and it will be very simple, but under certain conditions, if you know how to trade it correctly. Because CFDs, it is one of the most risky assets. Why? Because it is highly leveraged. So how we can trade the CFDs in a correct way? Before we know how to trade it in a correct way, then we should know that CFDs are highly leveraged products. So what do we mean by the word leverage? So if I told you, for example, that you would like to start your trading journey and you have deposited in your account $1,000, okay? So this is your deposit, okay? Now the price per ounce of gold, the price per ounce of gold is equal nowadays to 4,378. This is 1 ounce of what? Of gold. Now, do you think that with a $1,000, would you be able to trade gold? Unfortunately, no, you cannot, because you don't have the required amount in your bank account, in your broker account. So by this, you need to borrow some money from your broker, okay? So it is like taking a loan, but it's not as similar as a loan from the bank. You are just taking money from your broker, which is known as the leverage. So the leverage is represented like ratio. What is the ratio? 1 to 100, 1 to 500, 1 to 1000. So what does it mean? So if you choose, for example, 1 to 100 leverage ratio, so it means that every single dollar from the $1,000 that you have deposited, they will be multiplied 100 times. So by $1,000, you would have $100,000 to trade with. Imagine, you will be having $100,000 to trade with only from $1,000. Now, would this is representing something good or something bad? To be honest, leverage is something that is very, very good, and it's something that's very, very bad. Okay, why? Because if you are trading with, I would say, people's money or the broker's money, and you made a profit, you will make a lot of money. But at the same time, if you lost, then you will lose a lot of time and your account will be blown in no time. So leverage is something very good to use it, but you should know how to use it well. Okay, so leverage magnifies both. Sorry for that. Just one thing. Okay, so leverage magnifies both profits and what? Magnifies both profits and losses. Okay, because let's say if you have $1,000 and you don't have leverage, Okay, so if you don't have a leverage, you will choose 1 to 1. So the $1 from the $1,000 equal $1. So 1,000 equals 1,000. I'm sorry for this message. Just a minute. I'm sorry for this error that's happening. I think something with the yes. Thank you, Mustafa, for your feedback, and David for sure. Thank you so much. You will learn a lot once we are going more deeply into the slides, and you will really get to know that trading is something that it's a long story, but you will enjoy every phase of it. Okay, so if you have a $1,000, and you don't have leverage, and let's assume that you are a super trader and you have made a profit of 10%. Okay, so what is your profit? Now, what's there is $100. Okay, then you would have $1,100. But let's see if you have a leverage. Okay, now if you have a leverage, you would have $100,000. Okay, if you have $100,000 with 10%, then it's $110,000. Wow, amazing, right? So when you have more leverage, you are entitled or you are eligible to take more trades. More trades mean that you're making more profits. But at the same time, the market is not always in your favor. As you may lose, you may win. Okay? Okay. Now, for the CFDs broker who provides the liquidity service for you guys in order to trade gold, to trade silver, to trade Forex, to trade whatever currency or whatever stock or whatever asset that you would like to know, then there are some of few things very critical that you need to choose or you need to take care about before you decide to trade with this broker. Number one, you should check whether this broker is regulated or not. Okay, now you tell me, and why does it care? Okay, now I have a broker, he's giving me a very good liquidity access, he's giving me a lot of promotions, a lot of low spreads, I don't pay high fees, and so on and so forth. Okay, cost is something important to consider. We are always looking for small cost, okay, small spread and everything, but this is maybe show a red signal because I'll tell you later why these, fancy promotions may not be good for you. So the regulation is number one. You must make sure that you are dealing with a regulated broker and is having different license in different places. Because see, now the financial system, the entire financial system, whenever your country is or whatever your country is, now the financial system is one of the most critical systems, okay? And within this financial system, we do have institutions such as banks, and we have the markets, okay? So the markets, the stock exchanges. Now, we do have access to the stocks, the bonds, crypto, we do have everywhere. We do have the access to everything, okay? So we are here, we are the broker, okay? Now, this market, okay, is regulated by a regulatory body. So there is a regulatory body that oversees these financial markets. Now, if your broker is not licensed, okay, and you deposited your money, you started to make profit, and now the time come to withdraw your money and enjoy it. Once it come to the withdrawal, they are delaying the withdrawal in you, and then out of a sudden, maybe they started to freeze your accounts, you've seen some hidden fees and so on and so forth. Now, if you would like to complain or to ask for your rights that this is my money, I kept it in this broker and I'm not able to get it. Now, if you complain, the first question that you will be asked about is your broker licensed or not? Then your answer would be, no, it's not licensed because you didn't check. So unfortunately, the regulatory body is not going to do anything for you. Okay, so please make sure to keep your money safe with a safe broker. Okay, this is number one. Okay, so you need to check the website, you need to check the license, you need to check also the reviews about the broker. Okay, so for any broker, any website that you will go for example, let's go to your prime broker here, you will find the reviews. Okay, you will find the Google review, you will find App Store, you will find Trustpilot, investing.com, all of these things. Don't even check from one source, check from different sources. Okay, once you check from these different sources and you, okay, sure, that it's a high rating, the customer are satisfied, then, and you check that the regulation is there, then let's move to the second part. Okay, so you are done with the first one. Number two, the fees and spreads. Okay, so what are the fees and spreads? Okay, so the fees is that for sure the broker is not giving you the access to the market, okay, without taking anything. So what is the profit of the broker? So simply speaking, now you are our valued client in PO Prime and you open an account with us. Okay, now would you like to buy, for example, a gold? Okay, so you bought gold. Okay, so once you buy a gold, we take a commission from you. Okay, this is our profit. Okay, we charge you a commission. Okay, this commission is going to vary from one broker to another broker. Okay, so this is the first thing that you need to take care about. Very high commission is something that's not acceptable. Very low commission, it's also something that is not acceptable. You need to check the average of the industry. Okay. The other thing is the spreads. Okay. So what are the spreads? Okay. So the spreads, simply speaking, just to explain it for you. Now, if you come here to, let me show you a trading view, for example. Okay, just to explain what's the concept of spread. Okay, so we do have a sell button and we have a buy button. Okay, now for the sell button, we can see that is 152.609, and for the buy button, it's 152.616, for example. Okay, so there is a difference, right? So when we are going to buy, okay, you will buy at the price, which is this price, the highest price. And once you are going to sell, you are going to sell at the lowest price. So the difference is 0.2. This 0.2 is known as what? Is known as spread. Now, since we are dealing in the financial markets and we are a broker, we are not the stock exchange. We are just a broker that's giving you a contract on the asset classes. So there is no central location. There is no one price, okay? So every broker may set different spread. Every broker may set different spread. For example, PO Prime may set 152.6 and 152.8. So we have a spread of 0.2. Another broker may are going to 152.4, 152.7. So they have 0.3. So the higher the spread, okay, it means that they are charging you more, okay? But now, if you're going to ask me, should I choose the lowest spread? No, you shouldn't, because it's something that is also a red signal. Why the broker would charge you a low spread and a low commission? For what? Okay, you need to think about it. Very low spread is not something good, and very high spread is not something good. You should be looking on the average, because even if the spread is a bit higher, believe me, they are going to provide you extra more services. That is like a promotion, deposit bonuses, and so on and so forth. Number three, the platform and the executions. What platform do we provide? Okay, what platform they are providing to you? Is there a latency in the execution? Once you just click buy, the order is executed, or it's delayed, okay? If they have a customer support service in multi-language, okay, and reasonable promotion. I didn't say fancy promotion or no promotions at all. I said reasonable promotion. So for example, some brokers would tell you, okay, I will give you 100% deposit bonus. Okay, that's good. Okay, so if you deposited $1,000, okay, then you would get another 1,000 as a bonus, you have 2,000. Of course, you are not allowed to withdraw the bonus, but it is something like a credit. I'm giving you an extra money to trade more, okay? So if I'm giving you a 1,000, okay, is it something good or no? Yes, it's good, but why the broker would do something like this, okay? If he's giving you 50%, okay, acceptable. Okay, if he's not giving you at all, so they don't have a promotion. So you need to check a reasonable promotion. You need to check a reasonable promotion, because people are somehow, especially who do not have the experience in the market, they got attracted. I'll get a 100% bonus. So wow, that's amazing. And they started to put all of their money, and then something happens, so your money is gone. So make sure to choose your broker safely, because this is your money. You don't want to lose it. Okay. Okay. Now for this part, I hope there is no question. I hope I clarified everything in details, because it's a quick webinar. So I hope it's all good. Okay. Now, introduction to different platforms. Usually the most common platforms that we have. Okay. So usually the most of platforms that we have the MetaTrader 4 and MetaTrader 5. They are the most known platforms. Okay, MetaTrader 4 and MetaTrader 5. I believe all of the traders, they use MetaTrader 4 and MetaTrader 5. There are some brokers that are using cTraders, and most of the brokers, they have the WebTrader. So WebTrader is not an application, or is not a separate application or a platform, but it is something that is usually linked to the broker itself. It's a website. You don't have to download it. So for example, let's go to PO Prime here. Okay, so if you go here and you said, for example, trading, what we have MetaTrader 5, we have MetaTrader 4, and we have the PO Prime app, and we have the WebTrader. So if you click on the WebTrader, okay, what it's gonna show you is the following. So you just start trading. Okay, Then, for example, you click open a demo account, you write your name here and your email, and let's say I'll deposit $10,000, okay? And I'll choose a leverage of 100, for example. And then I say I agree with the terms and conditions, and I click open a demo account. Okay, so invalid. Okay, sure, let me change the number 0509254 also, so +71. I'll do like this. I'll click and open. I don't know why it's not opening. Okay, so once you click all of these things and you put your number, mobile phone, okay, so maybe because my number is used already with the companies, it's not opening, but you have to enter your mobile phone and then you will click open a demo account. So I believe I do have a demo account already. So connect to account. Still, because this is the demo one. However, I'll show you some screenshot later on about how to connect to the demo account. Okay, so once you are done with this, you will open the demo account. You will find that the website or the MetaTrader 4 or MetaTrader 5 is opened in this website. But the normal case is that MetaTrader 4 or MetaTrader 5, they are applications that you can install them on your mobile phone, okay, and you can install them on your laptop or desktop or whatsoever. So, for example, this is the MetaTrader 4 on my phone. I do have everything here in front of you. I can download the application and I start to execute the trade. Okay. The web trader, it shows you MetaTrader 5 or 4 on the website of PU Prime, so you don't need to download anything apart from the application itself. Okay. Now, why MetaTrader 4 and MetaTrader 5, what they are actually doing. So just to clarify the process, you open an account with PU Prime. Okay, so you open the account. Now, this account, you cannot do trading through this account. So the execution of trading, if you would like to buy gold, if you would like to sell gold or whatsoever, then you need to do this through one of these applications, MT4, MT5, or the web trader or cTrader if you're choosing any other broker. Okay. Okay. So this is only for execution. Now, the account itself that you have opened is for deposits and withdrawals. Okay. Is that clear? Okay. So opening a demo account with PU Prime, what you will do is that you will go to the website here and you will find a sign up button. You click on a sign up button. Okay. And here you will find this word demo account and you will start to write your name. You'll start to write your email like this. Okay. And then you create a password for you. Okay. And then, okay. Okay. And then you check, you agree to the PU Prime, the data, a referral code. If you have a referral code, it's fine. And then you click on creating the account. So once you click creating the account, they will send you a verification on your email. You just click on that, and then you will be able to download MetaTrader 4, MetaTrader 5, and you will have a certain credential for that to start the trading. Okay. Okay, so this is the account opening verification. This is my first name. I'll put my gender, my mobile phone, and then I click next. So here you have everything ready for you. This is the markets. Forex, crypto, shares, indices, metals, all of these things, we do have a contract on them. Now, for the part of the leverage, it's very important to note that leverage, okay, the extra money that the broker is giving to you or the borrowed money is only on Forex and metals. It's only on Forex and metals. So for the, and crypto as well. Shares, ETFs, stocks, all of these things, we don't give leverage on that. Okay. So that would be this your profile, and you can, for example, say I'll deposit a money. Once you deposit a money, you select an amount here because I need to verify, and then you enter an amount, and then you continue, and then you start to what? You start to trade. Okay, now, what is the advantage of opening a demo account? See, the most important thing from my perspective as a trader in this industry for 5 years, I would say, is practicing. Okay, you need to practice your trade. You need to practice your trade. Okay, now practicing is not going to come by without a knowledge, without a clear plan, without a clear vision, what you should do. So number one, you need to have in knowledge, okay? And I do by the word knowledge, you need to have 100% full knowledge. Don't ever trade on half knowledge. So, for example, you know support and resistance. Market does not work only on support and resistance. Okay, so if the price goes higher, you need to sell. If the price goes lower, you need to buy. No, it's not as simple as that. Okay, you need to know what is the market structure, what are the candlesticks patterns, what are the continuation patterns, reversal patterns, the indicators, and so on. So you need to know the entire thing. Okay? It never works like this. Everyone has expected in this morning that the gold is going to drop. Okay? So if I go here for the gold is continuing to go higher. Okay? We don't know. The RSI is showing a divergence and so whatsoever, it's going up. So make sure to understand the market at the beginning, full knowledge, number one. After this, number two, you need to practice. So practice what exactly? You need to practice your strategy. So what do I mean by the word strategy? So I think if you go to YouTube, you will find everyone is speaking about this strategy is a 99% winning rate. There is nothing like this. Nothing like this. There is no shortcut in trading. Okay? There is a one single indicator, a magic indicator that will increase your win rate up to 95%. It's not nothing like this. A strategy means that you need to have certain rules. 1, 2, 3, 4, 5. If these rules are met, okay, in a certain asset class, then you buy. If one condition is not met, then you don't take a trade. Okay? Why you are doing this? Because you want to test whether this strategy is working for you or not. Okay? So you need to have a one strategy or two strategies maximum. Work on this strategy for at least 1 to 2 months, practicing on a daily basis. Okay? Once you practice on a daily basis, then you can start putting real money. But there is one thing. If you are practicing and you started to lose your money, then you would feel, okay, that's fine. No worries. I lost it. I'll just deposit again, right? You lost them. No worries. I'll deposit again. And then if you made a profit, okay, on a demo account, you will start to feel, oh my God, it's easy. What about the losses that you have just lost? You're not looking for them. You're just looking, I deposited $1,000. Now they are $5,000. Okay. So it may be real. Now here is the part of emotions. On a demo account, okay, because trading it's just a mental game. So believe me, 10% in trading is strategy. Make sure that you have a good strategy and you practice it. And the other 90% to succeed in trading is you control your emotions. Control your emotions. Okay. You have burned 5 live accounts since while I started. Mustafa, it does not mean that you are a bad trader. Believe me, it's not a bad trader. You just want to control your emotions. You need to accept your losses, you need to accept your profits, and that's it. Okay. So for example, at the moment, I'm speaking with you, I do have a session with you right now, and I do have a loss on my account at the moment running for the gold. I don't care what's going to happen. If I lost, I know my stop loss is there. I will lose a certain amount of money, and that's it. I'm satisfied. Whatever happens, I can live my life. Don't panic once you see that market is going in front of you, in your favor or against you. It's fine. Because you know that you are going to lose a certain amount of money, and if you made a profit, you will made a certain amount of money. So this is trading, okay? But just keeping like watching the charts the entire day, this is not what we want to do, okay? Okay. Mindset is key in trading, definitely 100%. So the cons for the demo account, that it may give you a fake overconfidence that you are, okay, you are a very good trader, but you didn't get the first shock of the real market. You didn't get that pressure and the heart rating increasing once you press the button of buy and sell and so on. So if you are seeing yourself that you are good in trading on a demo account, you can try to deposit a very small amount of money, $50 or $100, and you start trading on these things. Forget about the profit. We are not caring about the profit at the moment, okay? We just want you to practice your emotion. You have to be emotionless person in order to succeed in trading, okay? Okay, that's great. Now, the most important part, which is going to help you to be emotionless, which is the risk management. Now, what is the most important thing in the risk management? The risk management actually is, we are doing a risk management as a traders because the market is very volatile, okay? And no one on the earth is expecting where the market is heading to. If someone sending you in a signal group that the market, okay, is going higher, okay, it might go down, okay? So believe me, no one knows. So I just want to protect my capital. Just think about your capital as your food, okay? We cannot survive without food, right? Okay, so to protect yourself and to survive and to have food, enough food for you to survive in this life, then treat your capital as a food, okay? Make sure that you are utilizing this capital at the very most advantage for yourself, okay? So for that, what we need to do, we need to have a strict risk management rules, and we need to stick to these risk management things, okay? So why risk management matters. Now, I'll play a quick game with you guys. And this game is just for, you know, giving you or let you imagine why risk management is important or number one in the trading. So emotions, risk management, if you excel them, believe me, 100%, you will succeed in trading. Okay, so now my game is a bit short game. Let's assume that we are traders and you guys have started your trading journey today. And we have day one, we have 5 days a week for trading. And for every single day, we are just going to take one single trade. Okay. Now, the conditions of this game is that if you lost, okay, I want you to expect the prices. I want you to expect the prices of anything. Let's assume this is the gold or Euro USD or whatever. Forget about what is the contract itself. If you lost, you are going to lose $100. If you won, you would have a profit of $200. Okay? Now, I'll create a pool, okay, for day one. And I want you, sorry, oh my God. I want you to guess what is the correct answer for day one. What do you think the price is going to go up or is going to go down? Okay, so I'll create a pool. Okay, and let me create another one for day one. I think you have seen what happens to the price. Just let me know if it's going to go up or it's going to go down. So I'll save and I will save to library. And I'm going to launch this and you tell me what is your expectation to this day one. Okay. Okay. Good enough. So 62%, 63%. Okay. I'm just giving, okay, for 1 minute. Let's see. Okay, I think we are done. We have 66% of the people here are saying 67%. I'll say, okay, 60% or 70% to 30%, they are saying it's gonna go up. And the others are saying it's gonna go down. So let's see what happened here in day one. It goes up. So people who voted that they will go up, okay? So now we are just simulating the market, okay? We are trying to take money from each other. So in this webinar, 67%, they got 200, okay? And we have 33%, they unfortunately lost 100, okay? Good. Now, let's make expectations for day two. Okay, so I'll make another poll for day two. Okay, so here's day two. Let me know whether it's going to go up or it's going to go down. And this is required. I'll save it. And I would say, let's launch this. Think about it. As you can see, the price is heavily going down. So let's see what's going to happen in the market. What do you think? I need your answers. Down. Okay. Are we done? I think we are done. Let's see how the market is going to react to this price movement. So it continues to go down. So 74% of the people in this webinar, 75, I would say, they guessed it correctly. So if you are from the 75%, 75%, yes, congratulations. And if you are from the remaining 25%, unfortunately, you lost $100. Okay, no worries. Let's continue for day three. Let's continue for day 3. Okay, day 3 up or down, and save, and let's launch it. I'm waiting for your expectations as well. Okay, and this is how the market is working, guys. We're trying to take money from each other. We are trying to take money from each other. So day 3, okay, required. I'll launch it at the moment. Yeah, let's start day 3. Up, down, up, down, up, down. Okay, 68% are saying 68% are saying up, and 32% are saying down. So let's see what happened. It goes down. So let me just share again the poll. If you are from the 68%, congratulations. You have made another $200. And if you are from the 32%, you have lost $100. Now, I'm going to make it more quickly for day 4 and day 5 as well. So this is day 4, up or down, and let's save to and get ready for that. Okay. %54 are saying up, 46. Okay. Let's see. It goes up. So 51% are having a profit, and 49% they are losing $100. The others are having a profit of $200. The last day, let me tell you what's going to happen the last day, and now you will understand why risk management is important. And I believe now you guys have even got an idea what's happening. Okay, so it's go up or it's going to go down. Let me share this the final day to know why risk management is important. Let's launch. Okay, 55 are saying up, 58, any more ups? Okay, I think we are done. Let's see what happened in day 5. It goes down. So the 41% got a profit of $200, and the remaining 59, I'm sorry, the remaining 59%, they guessed it incorrectly and they lost $100. Now, what is my purpose of this game? So guys, let's think now. Has there any one of you has expected the 5 days incorrectly? Anyone? Can you just write in the chat that has any one of you like expected the 5 days? Totally incorrect. Failed? What failed, Mustafa? Did you fail, Mustafa? Did you guess all of them incorrectly? Okay, so 4 correct. That's brilliant. Now, this is 2 of it correct. 2 of it correct. Okay, that's good. Okay, so 4 correct, 3 correct, 3 correct. Brilliant. Now, if you go here, and if you are sticking to this plan, so what is the plan? The plan is if I'm losing a certain amount of money per day. So Mustafa, he said to me in the chat that, okay, I've blown 5 live accounts. Now, Mustafa, if you have a certain plan like this, that if I'm going to lose, I'm just going to lose. Now, you have expected 3 correct. So how much money did you make? So 3 times 200, you have made 600 in profit. Okay? How much incorrectly, or how many incorrectly have you expected? 2. So 2, you have lost only 200. How much is your profit? $400. Okay? Only 3 trades out of 5. What if you incorrectly, for example, let's say 3 incorrect and only 2 correct. So if 3 incorrect, then you are losing 300. If 2 are correct, how much money you are making? 400. You're still in profit. Okay? See, this is what you should do before you enter to any trade. Okay? Why is profit amount is higher than the loss amount? So this is what I'm going to speak about it right now. So we do have something in trading that is known as risk to reward ratio. Now, if I am trying to do a trade at the moment on, for example, let me choose GBP USD, anything. Okay, so this is the GBP USD. Okay, let me remove the drawings now. Okay, and I want to take a trade. Okay, so what trade I will take, for example, in such case, I think it's gonna go up. I don't know anything about technical analysis. I don't know anything. I'm just forecasting. So in trading view, you have these 2 things, the long positions and the short position. So if you click, for example, on long position, let's assume this is your entry. So you will enter here and you will stop to this highest candle. And you think that the price would, you would put a stop loss here. So you can see that there is a risk to reward ratio of 2. What does it mean? It means that you are expecting the price to fully go here. If the price goes here, congratulations, you would have $200. And this is known as what? Take profit. Okay? So you will take a profit once you enter into a trade. You would set that you will take a profit at this price, 135279. Okay? And there is an option on the platform that you are using, something called stop loss and take profit. You can enter the prices manually. Okay? Here is your what? Your stop loss. Okay? So if you lost, you will lose $300. So every single time you are entering into a trade, if the market goes against you, okay, you are going to lose a certain amount of money, which is your stop loss. Whatever happens in the life, whatever happens in the world, do not ever change your stop loss and do not ever trade without a stop loss. It must be there, okay? Because if the price goes against you, then you are very satisfied if you lost the $100. You said that. You decided, I need to lose $100 if I didn't win. But if I win, I'll take a profit of $200. Now you would tell me, what if the price goes to this level and then it reversed back and then it goes below and then it goes up? Keep the trade until it hits your take profit. So you only have two options, either a stop loss or a take profit. And that's it. Okay? If you stick to this plan, you just need 2 trades out of 5 correct to make profit. Simple. Okay? But there is one important thing that you should understand. Now, what is my lot size? So we do have different type of lots. We have the standard lots, and we have the micro lots, and we have the mini lots. As long as you buy more contracts and buy more lots, the price is going to go here faster. Okay, so you may lose 1,000, 2,000, or whatsoever. I just want to lose $100 and take a profit of $200. Because of this, you need to do something called position sizing. How much quantity should I buy or should I sell? So for that, if you go for example, Google, and you said trading calculator Fio Prime, if you go here, now you want to know your profit calculator. This is the margin, the currency converter, Fibonacci, position size. Now let's talk about the position what? Position size. Now, what is the asset class that I'm using? I'm here talking about the Forex, okay? What is the currency? It is GBP USD. Let's go down. GBP USD. And you check, okay? So I'm planning, this is my trade at the moment. Let's assume this is a live trade that I'm taking with you. Okay, so I am planning that the price will reach to here, or it's gonna, I guess, be till this level. But now I want to have a right position size. What is the base currency? The base currency here means that what is your account currency? Okay, so we will choose USD. What's your opening price? So the open price, if you can see here, I will enter from 134,174. So I'll write here 134,174. What is the stop loss price? The stop loss price is this price. 133,624. So if the price reached 133,624, please close my position. I don't want to go for it. 133,624. 1.33624. My trading position, I am buying because I'm expecting the price to go up. Now, if your account balance is, let's assume we will start with $1,000. Okay. Okay. And only risk a 1% of your this balance. So you need to calculate. So the position that you, or the quantity that you need to buy is 0.01 lot. So if you bought 0.01 lot, it will make sure that if the price goes to this level by 0.01 lot, you will make a profit of 200. And if you lost to this level, you will only lose $100. Okay, so very important thing, guys, please stick to the risk and reward ratio. At least don't enter into a position that is not 2-to-1. Okay, 2-to-1. Okay, so if you are risking $1 of your income, of your profit, you need at least to have a return of 2. Okay, so the risk to reward ratio should be 2. maybe you can accept 1.5, but 1.1 to 1, it's not worth it. Don't risk $100 to get $100. Okay, we don't trade like this. Position sizing, I've explained it for you, and I think we are done for today for this quick webinar. Just one thing more, just to, if you go here, we do have a lot of upcoming webinars, and we are going to launch a lot of educational content in the upcoming days, a lot of strategies, a lot of Fibonacci tools, Fibonacci extensions, how you can expect the divergence when the price is going to reverse, a lot of webinar education that we are going to launch it here. So I hope to see you again in one of our webinars. And if you have, please, any questions, please let me know. I'm more than happy to answer. Thank you so much, everyone. I hope you enjoyed it. Thank you. Bot and autopilots to the on the account. You mean you would like to link it to the a robot just to make it to execute the transactions? You can, but it will be linked to MT4 or MT5. So there are some companies that provides you with a robot or a bot that, okay, you give them the inputs. I would like to buy at this price. If the price reaches to this price, it will execute the transaction automatically, but it will be linked to your MT4 or MT5 account with the company, and then it will start. Okay, sure, sure. Any more questions? Thank you so much. Thank you so much. And thank you for choosing Pure Prime. And I hope to see you again. How does Islamic standard work with companies not using Sharia compliance be hidden? There are multiple accounts that is Sharia compliance for this one. So all of the brokers, they are providing standard accounts and they have Sharia Islamic accounts. So if we are speaking about the Islamic standards, since see, in Islamic banking or in Islamic finance, I know that if you are having you would like to buy something, that something must be physical, okay? But for the technological advancement, nothing now is physical. Even the salary that we are getting, it's all digital. We are only using cashless payments, okay? So nowadays, all the contracts that happening in this dynamic world, it is digital. So it's allowed for you to hold an asset that is not physical. Okay, there is a big difference between we are not gambling. We are predicting based on knowledge, based on science. We are not saying it will go up by sense, by gut feelings. There is a science behind this. There is a science called technical analysis. It's a huge science. So it's a science like physics, like anything. Okay, so we are not a gambler. We are not gambling to the price. We are not doing anything that is not. We are just studying the market. We analyze the market, and based on that, based on the knowledge and objectives, we take our decision. Okay, so there is nothing contradictory to the Sharia part in this. Thank you so much. Thank you. Soon I click long or short position based on a previous trend. My position goes against and start losing rather gaining. You can hedge your position. So if you are shorting, you can long. Okay, so if the price is going against you, if you are shorting, you're expecting the price to go down, then the price and will start to go up, then you can take a hedge. So if it goes up, it will make more profit to you, so you will minimize your losses. This is called hedging. This is the only way they can do. And this is will teach you, like, if there is a loss, the market goes against you and it hits your stop loss, it's over. Move for the next trade. Okay. Any more questions? Are companies or funds hidden that if I have Islamic standard, I got an offer to use a bot that used NASDAQ 100 will only trade with companies that are compliant? For this, you have to check. For this, you have to check whether they are doing this or not, because even though the companies that are listed in the NASDAQ or Saudi Tadawul exchange or whatsoever, not all of them are Sharia compliant, because there is a percentage of the debt that must be there. If the debt is more than 30% of the capital, then it's not Sharia compliant. So you need to do your own research for that. You need to screen this, okay? Because there is a percentage of purification must be done in order to be able to trade it if you would like to trade it according to Islamic Sharia compliant rules. Most welcome, David. I think I have more questions here. Any more questions?
Yes, please.
Yes, go ahead.
I'm new. I'm new to trading, and I'm wondering what could be possible. And I've tried following Signal to use Signal to trade from a Signal provider.
Okay.
And I also tried the copy trading options, but I really have not grasped the whole concept because it seems like I am on the losing side most of the time. What would you say to a beginner like me?
Okay. So if you are just following the signal providers, please don't do and don't pay for the signal providers. Instead, do one thing. Do one thing. You can try the copy trading. Okay. So in Pure Prime, we do have the copy trading. Okay, so what is copy trading? Copy trading that we will give you multiple profiles. There are multiple profiles of professional traders, and you can see their winning rate. Okay, and based on this winning rate, you will have to choose whatever one you would like to copy his trades. Okay, so this is one thing instead of signals, because most of the signals groups is not gonna benefit you, because they might have double or two groups. They sell here, they say here buy, and they say to this other group sell. One of the groups would, would profit. So first of all, you need to get the knowledge. Number one, don't ever build your trading success on someone who providing you with a signal. You should do it by your own self. Number one. So first of all, you need to get the knowledge. You need to understand what are the candles, how the market works, what are the fundamentals, how the news impact everything, and then you start to practice, right? Once you start to practice and you have a clear strategy, okay, you should have a journal. So I entered this trade. Why did you enter it? Because it meets your what? It meets your rules. So once it meets your rules, then you can be able to evaluate yourself, okay? And after that,
Yeah.
it will come gradually, step by step. Definitely all of us, we lose, okay? Sometimes we make a profit, sometimes we lose. But if you want to lose, or if you are losing, you know how much you're going to lose. Just as I showed you.
Okay.
If you are
Yeah.
going to make a profit, you will make it double. So you might lose in 2 days and make one profitable day, you are break even.
Okay.
Okay.
Great.
But this is going to
Great.
come by practice and knowledge and managing your emotions.
Okay. I
Okay.
would really love to follow up with the other seminar that will be coming up to boost my
Def
knowledge. That's the most important thing to me now.
Definitely,
Yeah.
definitely. We will post a lot of webinars regarding the beginners. We will give you like a series of how to build from scratch to a professional level.
Oh, that's great. Thanks so much.
Thank you. Thank you so much, guys. Can I not use just only Pure Prime app to buy sell gold rather than MT5 app? You can, definitely, if you would like to link it to the web trader. So use the web trader, enter your credentials for MT5, and then you will be able to do it, of course. Okay. What does the PU stands for in PU prime? I really don't know. Okay, thank you so much. Thank you. Thank you. Okay, I hope to see you again in one of the webinars soon. Thank you so much. Enjoy your day. Have a lovely evening and trade safe. Thank you. Bye-bye.